Good morning, ladies and gentlemen. Good morning, good morning, good morning. How's everyone doing today? Luciano, good morning. Nice to see you guys. John Novak, busy in here this morning. Daniel, Jim, good to see you. Oh, I hope everybody had a great weekend. Hey, Jason, good morning. How you doing today? Did you guys study this weekend? Everybody just sit in front of the computer, chained to their desk, studying patterns over and over and over, right? Because that's what we do. No, that's not what we do. We keep it simple. Life's about balance. It's all about balance. Um, Welcome to the room, everybody. It's Monday morning. We're slow rolling in, so I'll slow roll as well. We'll take it nice and easy as we get into it. Let's check news. Every morning when my charts are loading, guys, this is the first thing that I do. It's not because I care what they say. I'm kind of over news at this point in my life, but I'm very interested if there's the potential for some sort of emotional response in the market, something that may make it move a little erratic, spike one way or the other. So each morning I go to forexfactory.com/calendar, and I'm looking for these high impact. I'm looking for these medium impact news releases. You can see Monday, March 27th, we don't have any, which is pretty cool. We're just going to get in and we're going to trade the markets. We're going to get in, look for patterns, wait for rules to be met. And then from there, we'll just let the chips fall where they may. But that's the first thing I do every morning. As I go to that news, I like to take a look at it. And I'm going to start with a different picture today. Guys, I posted this in the room a little bit earlier. And I want to bring this up. There is a very distinct path, a very definite path to becoming a confident trader ASAP. And it's two things, guys. It's posting your pictures in the class, tracking your real-time performance in a spreadsheet. That's it. Since it's 9:01 a.m., I'm going to tell you 15 hours this week you have available to you to post everything that you do in the classroom. If you have a question about a look, if you take a trade and you're not sure what happened, good morning, Gary. If you're reading your indicators and you're not sure if your read is right where it should be, you have the opportunity to post in the room to say, hey, Mark, what do you think about this? Hey, Mark, I did this. Too much NCAA this weekend. Good for you, Gary. It's a good mental break. Guys, take advantage. You have a coach available 15 hours live every week to give you feedback. And then taking everything that you do and putting it into a spreadsheet. The spreadsheet's provided for you. When you download the software, it's right there for you. Guys, I'm going to give you a copy of my spreadsheet. I'm just going to drop it in the room right now, just in case you don't have one. Download that. Click and drag it over to your desktop. 3 pages on this spreadsheet, guys. There's your trade tracking sheet, which is your first sheet. Everything you do, every time you take a trade, win, lose, or draw, take a picture, write your rules on it, put it in here. And what this is going to do is you're going to start to recognize patterns that are making you successful, patterns that are creating winners, patterns that win more than they lose. But more importantly, you're going to recognize patterns in yourself. Every trader that I've met so far, hey, good morning, Ziba, has something that they struggle with, whether it is trading in determination conditions or whether it is fighting the overall momentum of the market. Everybody has a thing. When you post in this spreadsheet, you'll begin to recognize your thing. When you post in the classroom, I'll begin to recognize your thing. And then what we'll do is we'll work together to eliminate that thing that's keeping you from your goals. It's a very simple path, guys. It's been the same path for as long as I can remember with Nexgen. Give me your pictures, everything you do, put them in your spreadsheet. And then the long and short of it is learn the trigger line Fibonacci rules for when it's okay to trade. That's what the first half of this classroom really focuses on. We're going to introduce you to a high probability trend trade, to a trade that typically wins more than it loses, to a trade that has every advantage on every chart. You'll be able to simulate those trades, making sure that you understand the rules. Don't practice the wrong trades, guys. Build that muscle memory from the get-go. We're going to simplify. We're going to keep these rules, 3 simple rules. We're going to do it on 2 charts. And that's going to be our focus for the first 30 minutes here, guys. 3 rules using 2 charts. Hey, good morning, Thala. Nice to see you back. We are going to really just embrace the recipe for a trade. And that recipe is as follows. A trade equals momentum, a clear path, and an entry area. So I'm going to do my best in this first 30 minutes to introduce you to each and every one of those, right? We're going to talk about momentum. We're going to talk about a clear path. We're going to talk about an entry area. And guys, simplicity. You're going to keep it on 2 charts. You'll notice that John Novak did some posting in here, some great trading. And he's using 4 charts, sometimes 5 charts. I want you to allow it to be simple for yourself. I want you to embrace the idea that you're new. And the patterns that you learn to recognize on only 2 charts will begin to expand beyond those 2 charts, giving you more information and maybe giving you more advantages ultimately, but it's all going to revolve around the simplicity, guys. We're going to use a 13-2 chart, and we're going to let it lead the way. We're going to use the most current bar. You're going to be able to identify the trend of the market. If the trend of the market is up, the background will be green on your 13-2. If the trend of the market is down, it's going to be red. Very simple color coding. Your rule number 1, necessitating strong trigger lines, will happen on the 13-2. No termination conditions, nothing in the way. That's going to happen on the 13-2. And this is very much a broad stroke of a brush. It's taking the big picture of what's happening in the market, and then we're going to refine it. And I'm going to show you this picture after we talk about the refinement. We're going to refine that big picture. You're going to refine that big picture on your 5-1 chart. This will be your entry chart. This is where you're going to pinpoint with accuracy where the market is likely to continue. We're going to talk about rule number 3 being met, being so precise on where that market's likely to continue that you'll use a limit order and you'll wait for the market to come to you. But by using the smaller chart, it's going to allow you to reduce risk. It's going to allow you to maximize your profit potential. And here's a picture kind of illustrating why we use that 2 chart setup. Your 13-2, what happens in 1 bar on that 13-2 may happen in 15 to 30 bars on the 5-1. So when we have that momentum, that first part, when we have that clear path, we can come to the 5-1 chart and let this smaller chart get us right to that perfect entry that's going to help us reduce risk. It's going to help you maximize your profit potential. And everything that I talk about is coming from the tutorial section, guys, right here from the education page. Rules 1, 2, and 3, focusing on that recipe for a trade, for that high probability trend trade. And guys, we focus on this high probability trend trade. Good morning, Mohammed, because this is your best chance of success in the beginning. This is teaching you to understand the advantages, what they look like. And it's training you to become a chart reader, because 90% of what you do during the day is going to be reading your indicators, waiting for those advantages of momentum, waiting for that advantage of a clear path. And when you become a chart reader, when you really focus on what your indicators are telling you, you're going to understand where the market is likely to continue and use that point for entries. You're going to understand where the market is likely to go. This is going to help you pick out your profit targets. And you'll be able to understand where the market is likely to stop. And this is going to assure that you have a clear path as you enter a trade, guys. So it's a high probability trend trade. Give yourself 2 weeks, 3 weeks to really focus on this best of the best look. Try not to deviate outside and catch everything, catch the absolute best. Because this high probability trend trade is essentially the recipe for a trade. It's going to be those strong triggers providing the advantage of momentum. It's going to be those no termination conditions, no areas where the market is likely to stop, giving you the advantage of a clear path. And finally, that smaller, faster chart provides you that entry, using that limit order to buy or sell a pullback. And this is going to give you the advantage of an entry where the market is likely to continue. So without further ado, let's go to our large chart and let's make sure that we have the best of the best look to get things going, guys. And that starts with strong trigger lines. In an uptrend, when your background is green, your small triggers will be up. They'll be above the large triggers. Your large triggers will be widening. Good morning, Safia. They'll be angled in the direction of the trend, guys. It's the space that's created between the small and the large that lets you know that the odds are favorable for the market to continue up. And you'll hear this referred to as odds favorable momentum in class quite a bit. In a downtrend, when the background on my 13-2 chart is red, my small triggers are down. They're below the large triggers. The large triggers are widening. They're angled in the direction of the trend. The odds are favorable for the market to continue down. That odds favorable momentum provides the first advantage that we look for in a high probability trend trade. That advantage of momentum. And if you commit to this advantage of momentum, give yourself 20 days, that best of the best. It's going to help you because when those small trigger lines break into the large trigger lines, we call this a weakening of the large triggers. And that weakening of the large triggers lets me know that anything can happen up or down. So the opportunities for the high probability trend trade in an uptrend are going to happen from when the small triggers break away from the large until they return. Each of these circles on one of these tails or wicks represents a potential entry on the 5-1 chart, on that smaller, faster chart. And you'll see that they happen with that odds favorable momentum. Same look in a downtrend. So the idea is that you train yourself to look for the best of the best. You can scroll back historically and see how often odds favorable momentum was present. Guys, this is the S&P. And a simple scroll back from that point where they break away until they return. And guys, there's one of those little tails. That's a potential high probability trend trade. And as you scroll back, you'll see that odds favorable again. And once again, you'll recognize that this isn't a trade that happens every second of every day. 90% of what we do is going to be reading our indicators, waiting for those advantages. But if you learn to incorporate that little patience piece, what you're going to find is not only are you getting opportunities, but you're also getting the absolute best of the best opportunity. You're putting yourself in a position to have momentum that can carry you to that next Fibonacci level. All right, so that's rule number one, guys, the advantage of momentum. Give me a Y in the room if you're brand new with me, if you feel good about that. It's an easy recognition, isn't it? Small triggers break outside of the large triggers. Large triggers are wide. They're angled in the direction of the trend. Once again, guys, here's a picture for you. I love to share pictures. I encourage you to take these pictures, put them in your spreadsheet. Label them odds favorable momentum. Just identifying that best of the best look that's going to give you the highest chance of success. Next, we need a clear path. Rule number 2 says that termination conditions are false. And termination conditions are really pretty simple. I am going to take what I used to do and turn it into the easiest look ever. Termination conditions may reverse the market. And they may reverse the market based on a simple comparison of those same trigger lines to the areas. Here's a picture reminding you what your areas can be. It can be a divergence high, this magenta line that lets you know that there was a loss of momentum at a high pivot. It can be a divergence low, the cyan line, letting you know the same thing from a low pivot. It can be blue Fibonacci support, red Fibonacci resistance, or these yellow 1-to-1s. And it really becomes a simple matter. It's a 2-step process. Price will reach the area, and then it's a simple question of whether or not your trigger lines have made it through that area. And I'm looking for my picture. There it is. So I've broken down 3 scenarios for you. On the left side, price reaches Fibonacci resistance. Absolutely none of the trigger lines, not the small, not the large, have broken through this area. As this is what we call a termination condition, an area likely to stop the market. There is no clear path. Is that easy enough? Price reaches the area, trigger lines don't break. No long trades into the area. We're going to let that area break so that we have the advantage of a clear path. When both the small and the large break through an area, smalls get above resistance, large get above resistance, it behaves as support. Now you have the advantage of a clear path. Now you have nothing in the way. Rule number 2 has been met, no termination conditions. So no triggers, no trade. Both triggers, look for that odds favorable momentum, look for that entry on the 5-1. And there's another one of those tails with the rules met. And then there's one more look, guys. There's the potential to break. When your small triggers break through an area, when your large triggers remain below resistance or perhaps above support, this is an area with the potential to break with that odds favorable momentum, but it has not broken yet. We don't have the advantage of a clear path. Guys, this is a look that we call a 50-50 look, and you're going to hear that in the room. It has nothing to do with your chances of survival. It has nothing to do with the trigger lines relationship to one another. It has everything to do with the trigger line's relationship to the area that you're waiting for it to break. Smalls above, large below. This is simply an area that has the potential to break, but it hasn't broken yet. You'll see it the other direction. Small triggers below this area of support, large triggers are above. This is an area with the potential to break, guys. And on these 50-50 trades, as a brand new user, as you're learning to read your indicators, giving yourself the perfect entry on the 5-1 becomes advantageous, not giving away any other advantages. And we'll talk about those perfect entries. But I'm looking for it, if you got one for me, a Y in the room. When you're recognizing a termination condition, it really becomes a simple matter. Price reaches an area. If the trigger lines remain above an area of support, there are no short trades into that area. It's likely to reverse the market. Price trades into resistance. Absolutely no trigger lines break through the area. Once again, we can say that this is an area likely to stop the market. We're giving ourselves the advantage of recognizing when the trend is likely to end. And if you guys are the kind of people that like to save links, I'm going to go ahead and give you one right now to a YouTube video. Guys, this is a little 5-minute review for you. It's a great video allowing you to recognize the relationship of trigger lines to areas to understand when they may break and when they may not. And then sometimes price will turn from the middle of nowhere. Price will just kind of be going down, areas broken, triggers below, and the market seemingly turns from nowhere. You see it up top, even with odds favorable momentum. You see it down with a clear path. And this final termination condition is going to help you identify that. And this is the only termination condition that I'm going to look for on a 5-1 chart. 3 divergence in the same price range may terminate the trend. And guys, divergence is a very simple concept. It's written into the indicators. It's in behind the scenes. But if divergence is present, you have a loss of momentum. And I think that it's important to keep it simple to listen like that. Because remember, momentum is the first requirement for a trade. When I see 3 divergence in the same price range, it lets me know that a trend may be ending, whether it's from a low or whether it's from a high. When those small triggers work their way inside of the large triggers, we go from odds favorable momentum to anything can happen. Good morning, Bobby T. It becomes even more powerful. And then when those 3 divergences happen and that third is higher than the previous or lower than the previous from a high, it becomes even more powerful still. This is the only termination condition that I look for on my 5-1 chart, and it's going to help me identify change on the 13-2 before it happens. So momentum plus a clear path on the 13-2 will have you looking for an entry on the 5-1. And if we go back once again, guys, this is your 13-2 chart on the S&P. I want you to see how powerful termination conditions can be. Price reaches resistance and absolutely none of your trigger lines break through. There's a retest, but look at the reaction of the market coming from a termination condition. That's a pretty big drop. And then it goes all the way down to support, doesn't it? Price reaches support, absolutely no trigger lines break through. From fib to fib. And then the market goes up. Most of this is overnight. We're getting into the 6 o'clock hour. And guys, isn't it amazing? Price reaches an area of resistance. Absolutely no trigger lines break through. You know without question that this is an area that may reverse the market. From resistance, it pushes down to support. Give me a Y if you recognize it. There's support. No trigger lines have broken through. Guys, you're not looking for that short trade. All you're doing is giving yourself the advantage of recognizing where the market is likely to stop. If you scroll back on your 13.2, guys, you have 10 days worth of information where you can see and begin to develop trust and how often these termination conditions work, how often they reverse the market, and you'll begin to understand that that advantage of a clear path is going to keep you out of potential losers. It's going to give you the highest chance of success as you're learning to read your indicators. So we've covered rules 1 and 2, right? We have the advantage of momentum. We have no termination conditions. Guys, let's take a look at how to pinpoint, how to take that broad stroke of a brush, refine it down to the area where the market is likely to continue. Rule number 3 lets you know, I already know, you guys need to know. Rule number 3 says you're going to use a limit order, meaning that you're going to wait for the market to come to you, and you're going to use that limit order to buy or sell a pullback at an area inside of favorable large triggers. 2 charts, guys. I want you to think of them as the big crowd and the small crowd. The large crowd gives us the sense of what the market is doing. The large crowd gives us odds favorable momentum. The large crowd gives us no termination conditions. Your smaller chart, that smaller crowd, that little oppositional force to the overall scenario is going to give you your best of the best chance of success from an entry. That small crowd's going to fight everything and force a pullback. In Nexgen users, you're going to be there waiting for it. So rules are met on the 13.2. Everything says up. We have a clear path. There's nothing in the way. This will be the look of my 5-1 chart. This is where I start looking for an entry. This is where I decide it's time to pull the trigger to get in if my rules are met. I'm going to focus my attention on these large triggers. Guys, you're going to hear me say favorable large triggers a lot. Favorable large triggers are strong. They're one on top of the other. They're trending in the direction of the trade. One on top of the other is key. Whoops. And all I'm going to do is say, okay, I've got areas. Trend trades originate from an area. Those areas can be fibs, mid-bands, or one-to-ones. And they need to be inside of these favorable large triggers. But before I can get into the trade, I need to wait for a pullback, a small retracement in price counter to the underlying trend. And a pullback begins with a reversal bar. This reversal bar, this down bar after so many up bars. Remember, smaller, faster chart. The 13.2 still has odds favorable momentum. The 13.2 still has nothing in the way. This one bar on the 5-1 is going to give you the opportunity to create a window of opportunity. Let me overuse that word for a second. And for long trades, the window of opportunity goes from your highest point of support to your lowest point of support inside of favorable large triggers. In a downtrend, your window of opportunity goes from the lowest point of resistance to the highest point of resistance. And the key is that they are inside of these favorable large triggers. Guys, with the advantage of momentum and a clear path on the 13.2, you're going to activate a limit order right at the top of that window. And one of 2 things are going to happen. Either the market's going to come down and hit that price, 79.21 is the mid-band right at the top of the window, and you're going to be in a long trade, guys. The equation will have been met. Let's find the equation one more time. Post this in the room. Your 13.2 has given you the advantage of momentum. Your 13.2 has given you the advantage of a clear path. And guys, now your 5-1 has given you that entry where the market is likely to continue. This is your high probability trend trade. This is a trade that I will take 1,000 out of 1,000 times. Because this is a trade with those advantages present, typically ends up like this. Has the potential to win 70 to 80% of the time. This is your best of the best, guys. This is your focus for the first 20 trading days of your career with Nexgen. This is the trade that teaches you to read your charts. This is the trade that teaches you to not only recognize advantages, but also challenges. And this is the trade that's going to take you to a point where you can maybe start watching gold. Maybe you want to start watching, I don't know, what are other other charts? You may want to look at the Dow. You may want to look at your Tesla stock. You might want to trade Bitcoin. Guys, remember, it all starts with strong triggers. And we're not trading tails. This is your study tool, guys. I scrolled back to 6:11 in the morning. I'm going to scroll back on my 5-1 chart. And I'm going to see, what does that circle look like on a 5-1 chart? Well, it looks like a pullback to a mid-band right at large triggers. It turns into a phenomenal trade. Smalls have broken through, large haven't here. You've almost reached the area of resistance, but it hasn't quite. I'm just going to circle the tail. What's it look like? Pulls right back to a mid-band right there at those large triggers. And it does it again, even as momentum wanes. So what you're going to do as a brand new user is you're going to look for odds favorable momentum. You're going to identify no termination conditions, and you're going to look for the pullbacks to an area inside of favorable large triggers. I've done my best to help you recognize these looks, guys. On this spreadsheet that I shared with you, there's about 130 pictures. About 130 pictures of high probability trend trades, of those 50-50 trades where that's likely to break. And absolutely, so when we're looking for the clear path, Thala, I'll pull the picture up again. I like pictures. Some people learn visually, some people learn just getting in and doing it. So there's 3 ways to look at an area as you approach it. And remember that it all begins with price reaches an area, right? Those price bars come into contact. So Thala, if we reach resistance and absolutely none of the trigger lines break through, well, then we don't have a clear path. We've reached an area that may reverse the market. If the small triggers break through with odds favorable momentum, you now have an area with the potential to break, but it hasn't broken yet. It still may reverse the market. This may be a momentum-based overrun. And then finally, when both the small and the large on the 13.2 break through the area, that's when you have that clear path. That's when you have the absolute best of best. Absolutely. These are all on the 13.2. No worries. Because remember, that 13.2 is the broad stroke of the brush, right? This is the one that gives us the general temperature. And the 5-1 is just where we're going to refine it, where we're going to look for that absolute best of the best entry. Whoops, that was the wrong picture. I made some pictures over the weekend. I woke up yesterday kind of excited about teaching today. For a short trade, reversal bar starts the pullback. The limit order goes just below the area of resistance inside of favorable large triggers. And guys, on those entries, these areas that fall outside of the trigger lines, not considered part of the window of opportunity. So just the same thing, go in the opposite direction. The reversal bar signals the pullback. Absolutely, Thala. Reversal bar signals the pullback. Drawing a box from the highest point of support to the lowest point of support, it's the areas inside of those large triggers. This is your window of opportunity. I like that you say revisit. It's been there, and now it's going to come back and bounce. And your limit order goes right at the top of that window. Guys, this is a great picture. we use that area in between the large triggers, guys. These are moving averages. And one thing that you'll notice to be true is that price loves to return back to those trigger lines. And this is what gives us the best look. And when there's areas inside of those trigger lines, it acts as a wall. It gives the market a point to bounce. You can see here price reaches support, pulls all the way back to those trigger lines. It's that same concept that puts you in a great position for an entry here. And guys, this is definitely a Monday morning market. It's moving very slow. I love to use, good morning, Abdul. I love to use the live examples of what's going on. And really all we're getting out of the market right now is a wonderful look at termination conditions. 90% of what you do during the day is going to be reading your indicators and waiting for the advantages. 10% of what you do is going to be looking for a trade because of the advantages present. Guys, this is one of John Novak's trades. His 13-2 chart has everything up with a clear path. Anything can happen, triggers, but everything is up. Everything has a clear path. Where's his entry chart? The market pulls right back to an area of support inside of favorable large triggers. John Novak's working with how many charts here? My goodness. 1, 2, 3, 4, 5 charts. It's easy for John Novak to work with 5 charts because John Novak he wrote the software, right? 1, 2, 3, 4, 5 different charts to process. But I want you to notice something. When we talk about using multiple charts, when you get to that point to where you can, and guys, you will get to that point where you can. Absolutely, Ziba. Yep, Gary, crude and ES look exactly the same right now. Guys, what you're going to find, I want you to see this. This is a 21 chart. It still has odds favorable momentum. You can recognize it no matter what the time frame is. Every chart is green. Every chart is up with momentum. Every chart says the exact same thing. Ziba, his entry, see if I can get over there. He's about 2 ticks above support inside of favorable large triggers. The trade he took is a medium probability trade. It doesn't have the advantage of momentum. Does that make sense to you, Ziba? He doesn't have odds favorable momentum on the 13-2, but he does have a clear path. He has the trend. He has the areas. These are medium probability trades that are managed a bit more assertively, guys. And it's your ability to read your indicators that's going to give you, let's go to the glossary. We focus in the classroom in the first hour on a high probability trade when every indicator on every chart agrees for the trade. He does use his range charts a lot. He spent 20 years studying them. Every indicator on every chart agrees for the trade, guys. Strongest triggers, nothing in the way, room to your target. That's what we focus on for the first 30 days, guys. That's giving yourself the ability to read your indicators, to read your charts, to recognize the conditions that give you an advantage. Every one of you in this room, I guarantee it, is going to work your way into a medium probability trade. And this is when most indicators line up for a trade. However, a small issue exists. And it was easy to see in John's chart. His small issue was that he didn't have the best momentum on the 13-2. But he was able to use his chart reading to look at other time frames and determine that there were still enough advantages there to take a trade. When you're executing medium probability trades, you'll take them, you'll manage them assertively. And if there's trouble in your way, you may take a portion of your position off and reduce to a 0 loss level. Medium probability trades will ultimately be the vast majority of your trades. The advantages that you practice and recognize in a high probability trade are going to make it easy for you to manage assertively. It's going to make it easy for you to identify the small issue. It's going to let you know where to look for the risk. Guys, from termination to termination, Look at your 5-1 chart right now. The smaller, faster chart, trigger lines are flat, divergence is above, divergence is below. Thala, great question. 99% of the time, I would say, and that's a made-up number. 99% of the time, they're going to be the same color. Because when we've got the perfect entry, when we have that odds favorable momentum, when there's absolutely nothing in the way, the chances are that your 5-1 is going to have strong triggers as well, that your 5-1 is going to have everything that it needs to be green. And this color change happens. I'll show you a picture. The color change happens, whether it's a 13-2 or a 5-1, when your small trigger lines break to the other side of the large trigger lines. You're going to see that background paints green, goes from green to red. When they flip again, you see it go from green to red. And that's what creates the color change. That's what creates the overall trend. Remember that it's the 13-2 that we're really worried about, the 13-2 trend. It's rare that you'll get a red background and still have the entry conditions met for a high probability trade on the 5-1. But what you will find is you may get that trend change on a 5-1 when a medium probability trade. Maybe you're trading from an area a little bit below the triggers, maybe a little bit above the triggers. In your chart reading, recognizing on the 13-2 the advantages may put you in that position. Another question people have a lot, and maybe I can head it off at the pass, is guys, on your 5-1, on almost any entry, your small triggers are going to turn against you. Because remember, that's a refinement chart. It's a smaller, faster chart. In order for price to get back to an area inside of favorable large triggers, 9 out of 10 times, those small triggers are going to turn against you. But if they remain outside, the trend is still going to be with the ultimate trend. You know, the direction is still going to be the direction. So I don't want you to get hung up on small triggers turning against you. Worry about their relationship to the large, because even on a 5-1 chart, this is odds favorable momentum. So we have two trigger lines, Thala. I'll go to the live market and I'll show you. The dash trigger lines are the synthetics. These are actually your 13-2 large triggers. So if you're looking for a high probability trend trade, we're pulling back, right? In order to have odds favorable momentum, we have to have small triggers below the large triggers. This is a great visual indication that you're on the right side of those large triggers, that you're on the potential winning side of those large triggers. The other ones, these are just your 5-1 large triggers. Both are moving averages, but what we've found, or what John has found, because he's really done the study, is that when you take those 13-2 triggers and you work them in symphony here with the 5-1 large, when they trend one on top of the other, it gives you your absolute best chance of success. It gives you that tightest window of opportunity. And absolutely, you just nailed it. 13-2 large triggers, 5-1 large triggers. When these two work together, and let's see if we can find a spot where they're both. Notice how the market continues up, and then when they start to get wonky, when they start to turn, when they split and separate, you get these moments of indecision. So in the case of entry, you're focusing on your areas that fall inside of the favorable large. And the favorable large, great questions by the way, are when both of those trigger lines, the large and the synthetic, work together, one on top of the other. That's your best look. That's your smallest window of opportunity. Does that make sense? Because when they're split, when they're not working together, you may have areas all the way up here at the synthetics, and you may also have areas all the way down here at the large. That gap creates a crazy window of opportunity, doesn't it? So now as they start to pull together, you start to get that little consolidation. The market's pushing down. We're still in a termination condition. Here's a great example. At 40, 23, 30, how many trigger lines have broken through support? Not a one, right? So we're still in an area. Yep, I think you've got it, Thala. Not saying that there's a trade to be had, but if you're building that window of opportunity, go from the lowest point of the triggers to the highest, and then just squeeze your box to that highest point of resistance, to the lowest point of resistance. We'll move this over to make it current. See how there is one line inside of that window of opportunity. Smalls below the large, larger wide, they're angled in the direction of the trend. If we got a reversal bar right here, this would be my window of opportunity. 23 is where the market's likely to continue. With a reversal bar, my job would be to right click and to sell limit 2. Right there below that lowest point of resistance. Guys, give me a Y in the room if you see it. Smalls below the large, larger wide, they're angled down. In the event of a reversal bar, it hasn't happened yet. But because I've practiced this trade so many times, I've already determined my window of opportunity. There's your reversal bar. My entry is a tick or two below resistance. This is a trade that typically 70–80% of the time will target filled quick, didn't it? Let's go break even just for grins, guys. That's your high probability trend trade. That's your best of the best. Now we have a loss of momentum. Guys, do you see how quickly it pulls right back to that area? I love it when this happens live. Just letting you know this is a pattern that repeats itself over and over. This is a pattern that when you begin to recognize it, do you see how quickly I was able to anticipate? Price pulled to the top of the window, didn't it? So I didn't panic. My stop's outside of that window. Guys, you just made $112. This divergence, small triggers rolling up, lets you know that it may push a little bit higher. So catching that best trade, that first one, that best of the best, your goal for 30 days, guys, is to recognize this entry because great entries create manageable trades. Then we get divergence. Small triggers work their way inside. This let me know that it may be time to manage. You get to a zero loss level and you wait for that market to sort itself out. At the time of entry, the large triggers hadn't quite broken through that area of support. It's a 50-50 trade. It's an area with the potential to break based on odds favorable momentum. Perfect entries, quick profits, get to a zero loss level, let the market sort itself out. Does that make sense, guys? At the time of the pullback, the large triggers hadn't made it. And if you're curious, you can use those synthetics, Thala. Notice how they didn't quite break through that area? It's an area with the potential to break, but hasn't broken yet. I love it, guys. Live right in front of you. Your job is to learn this entry. Give yourself 30 days. Click on every one of these pictures. Get so good at taking this entry that your trades become manageable. There's a simple way to do it. And it starts with writing a simple plan. Now again, box it. Well, let's go through the rules, right? Smalls above the large. Smalls haven't broken through yet, right, Thala? So we're waiting for those smalls to get all the way through the area. So right now, it's not quite there. But can't you already look back? There's support. Mid-band's way above. It starts to become real easy to recognize areas of support or resistance inside of favorable arch triggers. The process, and I promise you, it probably takes about 3 seconds if you spend a couple weeks really just focusing on entries. You'll begin to recognize at a moment's notice where that window is. But remember that the key to the window is having the rules met on the 13-2. If you take great entries on the 5-1 without the advantage of momentum, with stuff in the way, it's going to lessen your win percentage for sure. So we're still waiting for the smalls to break through. There we go. So now the smalls have broken through. The large have not. This is an area with the potential to break, but it hasn't broken yet. Make sense? Doesn't this look exactly like the picture we posted in the room? Smalls are through, large are not. These patterns repeat themselves over and over. So this would be a medium probability trade. We don't have the advantage of the clear path, which means that if I'm looking for a potential entry on my 5-1, I want it to be perfect. I want strong triggers. I want no termination conditions. And I want kind of that concise little window of opportunity. Watch how these large triggers come up. With each bar that prints, they come up. So if there's an area a tick or two above, those large triggers may come up to it. Thala, does it make sense? New users, who else do I have new in here? Guys, the S&P has given us an awesome lesson today. Tons of examples. And this is the first thing that we do in class, guys, is we talk about the rules just so that you can recognize them, so you can understand what it is that you're looking at. And then the next thing we'll do is we'll click on everything that you do. Gary posted a picture right around 9:09, and he's talking about termination conditions. And I love this. This is a picture that grows great chart readers. Gary took a picture of a termination up top. He took a picture of a termination down below. And he's really just reminding himself that I'm waiting for the market to resolve itself. Guys, will you excuse me just 1 second, please? I'll be right back. I need to take a phone call. This is Mark. Hey. All right, I apologize about that, guys. I've been playing phone tag with this doctor's office for the last 4 days. I needed to catch it. So guys, this is what we call, this is just a study picture. This is Gary saying, without my rules met, I'm not looking for a trade. Good morning, Tank. Guys, this is a picture that you can steal right now. Copy his screencast address, go to your spreadsheet, and save it, right? Isn't this a great picture to study, reminding you the advantage of a clear path? I am not above liberating Gary's pictures. I'm not above stealing your pictures. Sometimes taking a picture when the rules aren't met is just as effective as taking a picture when they are. Just kind of reinforcing, right? Giving yourself that reminder, hey, I need a clear path. Gary, there's that picture. I love it, just like we did it in class. Conditions, perfect entry, quick profits, break even. Gary, great execution. Nice trade. Your job is to study to get to the point where you can take that one. Nicely done. Tony, let's see what you did. And you know I'm just compelled to say the tiger every time I look at it. 50-50, great recognition, no divergence, maintaining advantages, perfect entries, create manageable trades. Tony, great trade. You guys to write that down on a piece of paper. Great entries, create manageable trades. Why didn't you have a fib at 1026 like I did, Jar Jar? Let's see, you're on 8 at 1026. Okay, no worries, I'm with you. I said 1026 and I read it. So Jar Jar, what you're looking at on your 13.2 chart is you're not running synthetic triggers, or you're not running synthetic fibs. So what that means is you're only seeing the fibs from your 13.2. This Fibonacci area right here is actually, let me find the picture for you. The Fibonacci area at 4026, see how it's skinny on mine and it doesn't extend all the way through? That's a 5-1 chart fib. So on NinjaTrader 7, I can run those synthetics without a challenge. On NinjaTrader 8, you have to look right. So what you're looking at on yours is a 13.2, and you're seeing those 13.2, oops, where's my 5-1? There we go. You're seeing your 13.2 triggers, or excuse me, fibs, and you're not seeing the 5-1 synthetic. Yeah, take a look at them to the right. Because the way the software works is whether you're on NinjaTrader 7 or 8, you're looking at these key areas. And these key areas come up not only from all the pivots on the 13.2, you're looking at different time frames, you're looking at different areas. So these fib levels will come up. NinjaTrader 8 has a little bit of a challenge pulling all those over with the synthetic data. So looking to the right and see those fibs. And then if you also want to use your 21 fibs, man, I open a lot of pictures, don't I? If you also want to see your 21 fibs, you can draw a line on your 21 chart and it'll print over on your 13.2 on your 5-1, making you aware of those areas. NinjaTrader 7 just has a little easier time with the mathematics. So you'll see those synthetic fibs. But you see how on Tony's it doesn't extend all the way over? It lets him know that it's a 5-1. Adam, trade was never executed. Market reversed 1 tick below your entry, so it was never filled. Waited for market flow entry that never happened. Avoided the loser. Nice job, Adam. You had those trigger lines, right? It didn't quite make it to your entry, and you didn't chase. Great chart reads, Adam. Double divergence on the bottom says it's probably going to take out that pivot high. When it gets to that area where the pivot high is, you use that market flow chart, says just give me a signal. Great read, Adam. Nice job. The trade that was never executed, I mean, what an awesome read. Keeping you out of trouble. Nice job. And guys, there's that S&P. We never got a pullback, did we? Means it's not our trade. Now we're all the way up at that resistance area again. Small triggers haven't really made it through. Large triggers haven't broken through that divergence high. It's a medium probability trade at best, probably low because of the termination condition. We'll see how the market reacts. Only one of two things are going to happen, guys. Either the area is going to break, you're going to get odds favorable momentum, look for opportunities up, or resistance is going to hold, everything's going to roll, you'll get odds favorable momentum to the bottom, and you'll look for short trades. Here's one of those medium probability 50-50 trades. That was crude oil. Gary, I had a feeling, right? Odds favorable, area with the potential to break but hasn't broken. No divergence, strong triggers. You had an entry point, and that lower divergence says that we may push lower, right? Ed, where's it coming from? Divergence, divergence. Bad bottom without divergence, right? Pushes all the way back up to resistance. I love to ask where the market's coming from. Ed, I don't know. That looks like a termination condition. Mid-band's first stop. Don't have areas inside of favorable large triggers. Guys, look at this. Termination condition. Isn't that amazing? Gary didn't take it because of the bad bottom. Good read. Ed, the cool thing is we don't have to guess, right? There's no longs. No longs to be had. Everything is pushing down off of termination. There's no shorts to be had either. Do you see how just that little bit of patience? 90%. I know. Nope, I don't see any fibs, Stephen. I think you gave me the wrong picture. But it looks like you're on 8. Ed, can I share a picture with you to help with patience? And I don't think I made this one for you, but I think that it's appropriate. It really is for everybody. It's a simple issue of might versus has. And I think that if you study this one just a little bit, Ed, this helped me on the patience piece a lot. I hope that it helps you. As price comes into an area, so for example, you were like, man, that mid-band's probably going to hold, right? And that was where your brain was setting up for a long trade. Your brain was telling you, hey, that mid-band to hold. And you probably jump in, you get run over. So what happens, it's the might versus has. As you come into that area, but things aren't perfect, in this case, we're coming into resistance. I think resistance will hold. If you jump in at resistance, you get stopped out, and you're like, oh, no, it didn't hold, but it was supposed to. So you jump in again because you believe you're right, because we're all a little egocentric. And then you get stopped out again, and you're like, craps, resistance didn't hold again. So you try it again from higher up, and you get knocked out again. And you're 3 losses in, hoping that this area holds. I think resistance will hold. Well, guys, when your trigger lines roll, if an area is really going to hold, your triggers are going to roll. Resistance has held at this point. The trigger lines have rolled. And guys, this price where you hoped is the exact same price where it was confirmed. Does that make sense, Ed? I love this picture because it reminds me that there's going to be a fight at areas. At these key Fibonacci areas, buyers and sellers are going to duke it out. And it's being patient and waiting for that roll that keeps you on the right side of the fight. And you never got it, did you, Ed? Right here, people jump in and they go, I knew it was going to hold. And they get up 2 ticks and then they get run over. And it keeps them from recognizing that a termination creates a full reversal, gives them odds favorable momentum. The smalls are through support, the large are not. And in the event that there is a reversal bar, follow, do you see it? Isn't there a tiny little potential window of opportunity on a medium probability 50-50? And that helped me a lot with the patience. I hope it helps you. Stephen, same thing that I told Jar Jar. You are on 8, right? So this 2639 fib isn't pulling over to your 13.2 chart because you're not running synthetics. So that fib that you see on my chart, you have it. It's right here. Same as right here. So if you just look to the right, you can get it. Does that make sense? Bobby T, you think that it would, huh? No? All right, let me scroll up. I got you, Steven. All right, Steven, you're on NinjaTrader 8, right? So on NinjaTrader 7, are you familiar, guys? Is everybody familiar with the fact that when you run synthetics on NinjaTrader 8, it can create challenges? Have you guys been around for that talk enough lately? So Steven, when you look at NinjaTrader 7 and you're looking at your 13.2 chart, yeah. The lines that go all the way across, these are native to the 13.2. That's from this chart. On your 13.2, the skinny fibs that you see come from the 5.1 chart. So if you look at my chart, see how that skinny fib doesn't extend all the way? It's right there at 2650. There it is, right there at 2650. That's my 5.1 chart. Yeah, I'm on 7. So your fibs aren't turning over. So on your 5.1 fibs, Steven, you can just look right and know that they're there. And then if you want to add your 21 synthetics, which print as big fat lines on NinjaTrader 7, you can literally go to your, let me find it. I can go to my 21 chart, and you can do this on a NinjaTrader 8 chart, Steven. Just draw a horizontal line right on top of that fib and see how it lines up on my 13.2. You can do that same thing in 8, and you can bring that visual over. So you can have the visual of everything that I have. For the skinny lines that I have, you just have to look right. They're right there on your chart. And you can see it on the 5.1 as well. These are the synthetics that don't extend from my 13.2, from my 21. Does that make sense, Steven? Because I'm on the different platform? Awesome. Guys, 50-50 trade, right? Does everybody see it? It's a 50-50. Smalls are through, large are not. Give me a Y if you see this. This is an area with the potential to break but hasn't broken, which means that we don't have the advantage of a clear path. Is everybody comfortable with that? Okay. So on the 5.1, what does a divergence tell me? I like to annotate this chart because, guys, this is typically your first medium probability trade. I have a loss of momentum. Everybody comfortable with that? And I also have an area that isn't broken that has the potential. So that's 2 issues already, isn't it? And then let's compound that. I also have an area up here that isn't broken but has the potential. Are you guys comfortable with this read right now? Here's my trigger lines from the top to the bottom. Here's my potential window of opportunity. So far, so good, right? It's a 50-50 trade. Is medium probability No clear path. And guys, I love a clear path. So I like to talk about, though, what this means to us. It means that I have momentum, but I have two areas that haven't broken. It also means that I have a loss of momentum. Aren't these issues kind of stacking up? Areas that aren't broken, I'm losing momentum. It's not my best of the best trade, guys. People get excited about medium probability trades, but this is my take on it for brand new users. Guys, you can do whatever you want. But my money is worth a perfect entry on the 5-1 if that area hasn't broken, which means that I want no divergence. I want strong triggers and I want a small window. Guys, doesn't this picture look almost exactly like what just happened in the market? This one doesn't have divergence, a tiny little window of opportunity. What did our live market do? If you took the 50-50 from the window of opportunity, look how it came right back to that area that hadn't broken. You get a second divergence, your small triggers inside. Guys, this is a beautiful trade. Great entries make manageable trades. You could get in, make $100, get to break even. The second divergence gives you a management opportunity. But do you see how you have to read your 5-1 chart in order to take a 50-50, a medium probability? Your ability to recognize this second divergence in the moment, to recognize that the trigger lines are going up, to recognize that the areas haven't broken. Guys, this is all your chart reading. This is why I always ask new users, and I say please and thank you. For your first 30 days, guys, for your first 20 trading days, focus on that high probability trend trade. Strongest triggers, clear path, area of entry, and your ability to read your indicators in the moment is going to get you to where you can take this trade and you can make money. But you have to be aware of the conditions and when the conditions change. Does that make sense, guys? I don't want anyone to ever think they're going to be shackled. Gary, using a larger chart, I don't even care about the triggers. Isn't that a perfect termination condition? Doesn't matter if the price bars aren't through, the trigger lines haven't broken, and you get a loss of momentum. So guys, this is like trickle-down economics, isn't it? Watch this. This one says, hell no. This one says termination condition. All the triggers are above. This alone might be enough to keep me out of a trade. But if I look to the left, well, I've got a termination condition up top, no divergence. It's a 50-50 trade. So this says no, this says maybe, this says it's not perfect. Isn't that a great way to work through it? Maybe to add that next chart. And I'll just use the area, that 23 area. And Gary, remember that it's the relationship of the trigger lines to the areas, not necessarily the price bars. Ed, termination condition, 100%. Directly into support. Great entries create manageable trades, even when you're taking them directly into termination conditions. Ed, that's a tough trade. But that great entry gets you right back to the trouble spot. And now it looks like it's going to break, right? Now it's getting that momentum to the downside again. If you took it perfect, you make a little money. Divergence says just hold on, wait for everything to agree again. Guys, everybody loves 50-50 trades. Your ability to take a 50-50 trade is very highly dependent on your ability to manage. 50-50. Hey, Shogun, nice to have you. Perfect entries create manageable trades. Joel, you get out low tick. Nice job. No, you got out break even. Right? Perfect entry. It's okay to take quick profits. Divergence prints, you exit the trade, break even. Looks like 22. Nope, you got money on one. A little better than break even on the second. Nice trade, Joel. Great management. Not your best trade. Not your highest probability. Area of entry inside of favorable large triggers. It pulls up to the top of it. Quick profits. Nice job. Great management, Joel. Your ability to manage is dependent on chart reading. Look at this mess on crude. Do you guys recognize the consolidation here? Couldn't go any higher, couldn't go any higher, couldn't go any lower, couldn't go any higher, couldn't go any lower. Waiting for a breakout, right? Waiting for everything to agree to give those advantages. Waiting for every chart to say the same thing. Looking for an opportunity. Guys, I'm going to take a break. I'm going to go refill my water. If your rules are met, take a trade. If your rules aren't met, don't take a trade. If you're brand new, take a picture. Take a picture, identify that as a termination condition. Show me that you can take a picture. Shogun's testing. Shogun says, hey, Mark, check it out. I can take a picture. Nice job, Shogun. Your job now is to do that every day, guys. The people that take the most pictures learn the most the fastest. The people that write the most on their charts ultimately end up understanding what they're looking at with the most success. I'll be back in a few minutes. Guys, trade away if your rules are met. If they're not, sit on your hands. Tell me why they weren't met. I'll be back in a minute. All right, guys, let's get back into it. Let's see what we have. Still a 50-50 trade. Give me a Y if you recognize that we're trading into areas with the potential to break, but they haven't yet broken. Remember, guys, that a clear path is the second thing that we look for, isn't it? So clear path isn't present. We do have odds favorable to the downside. We're in this little moment of let's let it agree, right? Let's let things happen the way they're supposed to. Tony, 50-50, no divergence. Third divergence starting to print. Termination on the 8 range. Tony's saying, you know what? I'm going to hold off, right? And if you got the first one, it gives you a management opportunity. No trade. I love the no trade pictures, guys. When you guys say my rules aren't met, therefore I didn't pull the trigger, because it's really, there's two things that should be a factor in whether or not you take a trade. Ready? It should be rules met, or it should be rules not met. And if you keep it that simple, life gets good. Zeba, odds favorable, no terminations, perfect entry, money, money. Great job taking the lesson and applying it, Zeba. It doesn't have to be hard, does it? I love it. By the way, odds favorable momentum, clear path. Perfect. Zeba, have I done this yet? I'm going to steal your picture, and I'm going to come down, and I'm going to put it into my spreadsheet, because this is everything that I look for in a trade. And I can come back and I can study this trade, right? I can study this trade every morning before I start trading, so that I can try and do things the way you do them. Let's take a picture real quick. And we'll come into it. We'll show exactly why, guys. I want you to see this. I'm going to put a checklist on this. Are you guys using your checklist? Absolutely. Guys, I'm going to give you the same checklist that Zeba used to recognize this high probability trade. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? Not quite. Not mandatory, but it helps. Odds favorable? Yes. No termination conditions? Yes. Look at that entry, guys. Zeba had 2 ticks of risk on this trade once it started going the right direction. So by using the checklist, we know without a doubt Zeba nailed a high probability trend trade. Guys, here's a checklist. I just put it in the room for you as well. I print this out and put it on my desktop every morning. I print this out and I put it on my desktop, guys, and this reminds me of the advantages. This reminds me where the advantages lie. Ed, let's see what you have. You have smalls below the large are wide. Your entry is not in an area inside of favorable large triggers. You jump out. You let it run past everything. And now you've got an arbitrary stop, Ed. You are working hard, my friend. You are definitely working hard, but that's okay. Maybe it suits you. Maybe that's what makes you feel better about it. Guys, look at this. I love this picture. Hey, David Lucas. David Lucas, you are in the right spot, my friend. I got a note this morning that you're with us, brand new. Let me look at what you did, and then let's talk about what we do. When I post on yours, it shows me Ed's. That's odd. David, are you and Ed sharing a computer? Oh no, here we go. Yours is downloading down here. This is odd. I've never had this happen. All right, are you with me, David? And I'm just going to look at your entries. You went long, having lost momentum here. So, David, everything that I talk about in this room revolves around advantages, at least in the beginning, as you begin to learn the software. So as a brand new user, one of the best things you can do is really just kind of stick to this simple process. Make sure that you have momentum, make sure that there's nothing in the way, and then we'll refine that entry area. We'll get you into the best of the best. Does that sound good, David? So when I look at your charts, I'm going to use this equation and talk about what I see. Are you with me? The first trade, we don't have the advantage of momentum and the market pulls back. The second trade, we don't have the advantage of a clear path, but you're able to make money. I like it. Right here, once again, we don't have we're kind of at the tail end of momentum. I'd have to see your entry to see what happened, see if there was information to help with that. Here we have an area with the potential to break, but hasn't broken yet. I love your entry. This is a perfect entry. The one thing that I can tell you on this one is once you get that reversal bar, reduce your risk behind the reversal bar, especially on a 50-50 trade. Area with the potential to break but hasn't. And then when this divergence prints, it lets you know that we're losing momentum into an area that hasn't yet broken. And it gives you the opportunity to manage out of that trade with a little less loss there. So if all we're doing is looking at the final trade, and David, I hope you're with me. Your entry is perfect. I love everything about this entry on a trade that has the potential to break, but hasn't broken yet. And when I talk about that, and David, I hope you're with me. Price reaches an area, absolutely no trigger lines break through. We don't have the advantage of a clear path. That's second element in a trade. What you had was an area with the potential to break. You had small triggers through the area, but the large triggers had not. You had odds favorable momentum. This area, the 69 area, hasn't broken yet. So in your trade, whoops, let me figure out where yours went. So on your trade, those large triggers hadn't quite made it through resistance. They hadn't made it through the divergence high. So we have an area with the potential to break, but it hasn't broken yet. Your entry is so good. But when we get this loss of momentum, it really lets you know that it's time to abandon the trade. It's probably not doing what you want it to do. I hope that made sense. I hope you're listening. Guys, I'll always go through and review. If you have questions on what I say, let me know. Remember that everything we do revolves around that simple equation, right? In the very beginning, as we're looking for the advantages to be in the best position for success, everything revolves around momentum, a clear path, and an entry. And then your ability to identify these in the moment is going to make it easier to get through. So David, you gave away the advantage of momentum once. You gave away the advantage of a clear path once. And then you took a trade with the potential to break, but it hadn't yet broken. I hope that helps. Gary, you have a 50-50 without momentum. You chose not to take the trade, and it kept you out of trouble. Doesn't it really become simple, guys? Not your best look. This is your best look. When we talk about momentum, guys, Gary's been with us long enough. He recognizes this. Where does the advantage happen? The advantage happens with the smalls outside of the large, with that best of the best. There's your anything can happen. David, that was your first one. Odds favorable makes it easy. Anything can happen takes away the advantage. Odds favorable makes it easy. Guys, this is the area, and Safia had the great question once. How do I know whether to go long or short when the triggers don't agree? Guys, there's no momentum here. Larger down, smaller up, smaller down, larger up. Guys, this is that moment where there's this huge fight in the market. Rule number one keeps you out of this one. You don't have to predict what's going to happen. You can simply wait for that clear path, wait for that odds favorable momentum. By waiting for rule one, it makes it easier. Gary, you didn't see that first one? Oh, up here, that 50-50? This was more, I don't know what the 5-1 looked like there. But you see how, look at the momentum, guys, and even with the trouble spots, ultimately it pushes down, right? When it gets to the next trouble spot, there's no momentum, and Gary avoids a loser. John Novak did a huge presentation on trigger lines, on waiting for that momentum, right? That loss of momentum pushed it up to the higher point. Now the smalls are above the large. The large are down, but the smalls are above them. The background's green. Indecision everywhere. First advantage you can give yourself is don't fight the trend. There's no reason to. There's that 50-50 up top, right? Smalls broke through, but the large did not. The first entry is perfect with some divergence. If you take this entry, you get the opportunity to manage out. If you choose not to manage out, that third divergence in the same location says, well, I told you, but you didn't listen. Let's take a loser. Did anybody get in on the first one? Saying with this tiny window of opportunity and strong triggers, I'll give it a shot. Second divergence print, small triggers are inside. The market's telling you, hey, I don't want to take your money, but I will. And then it gives you one more chance to get out. And that third divergence says, all right, I warned you. I'm showing you change on a smaller, faster chart that you're not seeing on that larger chart yet. Guys, look at this. Did you, Tony? You got in? FOMO, broke your rule, but got out positive. It's nice when you can make a mistake and still get paid, isn't it? I was talking to somebody yesterday about 50-50 trades. You guys want to see something interesting? 50-50 trade didn't work. 50-50 trade didn't work. 50-50 trade didn't work. What does this tell you about what's happening in the market? Larger up, synthetics down. Who knows what's going to happen, right? Until it all agrees. The market overruns resistance, it overruns support, it overruns resistance. Guys, it's rare that this happens like this. But what do you see down here? There's a higher divergence with the trigger lines inside. There's a lower divergence with the trigger lines inside. When your market's overrunning areas, guys, and it happens sometimes, you're witnessing this huge fight. Your 5-1 chart can give you everything you need to stay out of harm's way. Pivot with divergence all the way to resistance. Absolutely no trigger lines come along. Now we're right back into that key area at 1550. Market's got us in a holding pattern if we're rules-based. So I'm going to take a big sip of water, guys, and we're going to shift gears. We're going to get away from the live market for a minute. And I'm going to do my best to give you guys everything that you need to be successful. Here's an example of how to write your plan for the first 20 trading days, guys. I'm going to put this one in the room for you. I want you to have it. For 20 trading days, I want you to focus on entries. I want you to be able to take the absolute best entry, that perfect entry at an area of support inside of favorable large triggers, that perfect entry at an area of resistance inside of favorable large triggers. And I'll use the phrase, guys, my trade is the high probability trend trade. In order to enter this trade, I must have the conditions of the checklist met. I want you to be very direct with yourself. I want you to give yourself the language, that ownership, it's mine. That reminding yourself that adherence to rules gives you the advantage of a trade that typically wins 70 to 80% of the time. Is the market coming from a good top or bottom? What does that mean? Is the market coming from a termination condition? Had it reached an area likely to stop the market? Did it reverse? That's a good top or bottom. It's not mandatory, but it increases the likelihood of success, guys. Did you have odds favorable momentum? Were there no termination conditions? Was there an area for entry inside of favorable large triggers? It's just the checklist, that same checklist that I gave you that I'm about to give you again, reminding you exactly what the advantages are. Momentum, clear path, and an entry. It's that recipe for a trade once again. We'll just close all of those. Define it, own it, make it yours. And then guys, show yourself pictures. What's your perfect long look like? What's your entry look like for a long? What does your entry look like for a short? Well, we know that it has odds favorable, right? We know that it has no termination conditions. We know that it comes from an area inside of favorable large triggers. Take this picture, steal it from classrooms, steal it from the manual, steal it from the videos, steal it from Gary if he takes a high probability trend trade. He's cool with that. Put it into your plan. This is what it's going to look like. Let's see what this one looks like if I follow the link. Looks like odds favorable momentum. It looks like absolutely no termination conditions. And it looks like a beautiful pullback to an area of resistance inside of favorable large triggers. I've defined my entry. Where's my Microsoft Word? And now I've begun to take pictures of my entry. And every time you take a picture of an entry, guys, every time somebody posts a picture of an entry, put it into your spreadsheet. Put a couple into your plan. Burn this image in your brain. What's it look like when it's perfect? And this is your first step, guys. This is 20 days. Define your entry. Give me a why in the room, please. If you're brand new, if you're comfortable with this concept, allow it to be simple. Allow yourself to be brand new. Focus on your entries, getting in at the best of the best spot. The pictures that I love to see from new users over and over is this one right here. Show me that you got in at the best spot. No matter what happens, win, lose, or draw, show me that you can find that entry, because great entries create manageable trades. So once you define your entry, you have to go through and you need to define your management plan. Management plans require that you can read your indicators. So in the beginning, it makes sense to keep it mechanical, to keep it pragmatic, to reduce the need for chart reading and keep it very just point and click, guys. This is the most mechanical approach I know for new users. Zeba found success with it earlier today. And all it says, I'm going to go to this one. I just put this in the room for you because it has pictures. Trade 2 contracts. The initial stop will be 12 ticks, adjusted above or below the window of opportunity. Perfect entry. The initial stop is where the market shouldn't go, beyond that window of opportunity. It'll be moved 2 ticks above or below the reversal bar in the direction of the trade. It's mechanical. It's pragmatic. There's no room for opinion, for hope, for fear, for anxiety. Reversal bar prints, 2 ticks above it. Pretty easy, right? The first profit target is $100, and when it's hit, your stop moves to break even. We did an example of that live today. First profit target is hit, new stop is break even, guys. It's mechanical. There's no room for you to hope or pray, and the reality is, as a brand new user, you may catch a lot of $100 trades that give you a break even stop. But $100 5 times a day is $2,500 a week. That's a $10,000 month on a trade that didn't go the distance. Second target will be $200. If it makes it, you're out of the trade with a $300 winner. If it doesn't make it, you're out $100. You're up $100. Everything about this is simple and pragmatic, and it keeps you from having to think, well, what do my indicators say? It defines it very if-then. Guys, that's your plan for success. And if you allow this to be your path for the first 20 trading days, you'll understand how to read your charts and understand fluently where the market is likely to continue, likely to stop, and likely to go. And the idea is to build this foundation, guys, to create this foundation, this plan that's capable of winning consistently as you expand your knowledge base through repetition. Your management plan will grow exponentially when you learn to read your charts. You'll begin holding for larger moves. Every entry you take, every perfect entry, creates an opportunity for management. But it starts with the perfect entry. New users, demos. I ask for whys in the room a lot. I ask you guys to let me know that you're with me. Is everybody comfortable with that? Keep it simple. Keep that anxiety, hope, and fear out of it, right? And then as you grow, guys, you'll be amazed 30 days from now what you can read compared to what you could read today, whether you're on day 1 or day 1,000. Guys, there's another copy of my spreadsheet. 141 pictures of high probability trend trades. Some musings on management. There's that very mechanical plan. Chart reading, termination conditions, everything you need to be a successful day trader. All you have to do is add the work. Get that elbow grease in there. Adam, 50-50, Rockstar entry. Oh, you put the stop. You chummed it, didn't you? You got in a little late. That's okay. You got $100 there. You went break even. Very mechanical, though. I love it. If I had taken the trade at 70.71, your break even spot would have been lower and the second contract would not have been taken out. It would have been hit before the market reversed. That's okay. Adam, what a great lesson. And I love that you came through and you annotated everything. Great entries Create manageable trades, Exhibit A. And Adam, one thing you can do with that one divergence, right? First target hit, your management plan will grow a little bit. You'll say, well, it's still strong triggers. It's still 50-50. It's still one divergence. My small triggers are still outside of the large. I know that my entry should have been here. Maybe I'll put my stop a couple ticks behind that area inside of favorable large triggers. And you'll be willing to risk a couple extra ticks as you grow, as you get this in the moment. I think you did an amazing job on this one, and you followed your plan and you stuck with it. And that $100 still feels better than missing the trade. That $100 still feels better than losing everything, hoping that it does what you wanted it to do. Adam, great trade. Gary, 50-50. Oh, going the other way, 50-50, divergence prints, perfect entry, quick profits, higher divergence, no loss. Gary, you can make $1 million with that plan right there. Nice job. Johan, Jack. Everything set down without momentum. It pulls up beyond. And you just waited for everything to agree, right? And then finish the move. Johan, I can't tell you how much I love this trade. Wasn't a perfect trade here. Ed, are you in the room? And Johan, here's the coolest thing about this trade. Did you realize this at the time? But the price on the entry where things didn't all agree and give you those advantages compared to the price where everything lined up and gave you that little entry, it's darn near the same price, isn't it? Do you guys see it? Because this is some next level chart reading. This is saying things aren't perfect over here. I'm not going to take that trade. And then saying now every trigger on every chart agrees. Now I'll look for an opportunity on a quick pullback to the areas right at the small and large. Oh, I love this trade. Beautiful trade. Zeba 50-50. First tick, first target hit, stopped out on the second. 50-50 trade, smalls are through, larger not, odds favorable, great entries, create manageable trades. It looks like your stop was a little bit higher than it needed to be. Nice job, Zeba. 53.20 today? Holy smokes. So, Zeba, do you see how that higher divergence gives you an opportunity to get out maybe even a little bit sooner? Because it's a 50-50, it's not perfect. And that's what's going to happen is eventually you'll have your finger over the close button right here. And you'll be like, man, if that divergence prints, I'm just going to hit close. And you'll get a couple extra ticks. Zeba, you are killing it today. Nice job. Little practice goes a long way, doesn't it? But would you agree? And I'm asking because Zeba's still relatively new, guys. Zeba, would you agree that great entries make it easier to manage a trade? Because you focus heavily on your entries initially, getting in at those best of the best spots. And it feels like it's easier. Guys, what do we have now? 50-50 trade, right? Smalls below, large or not. I see 3 divergences in the same general location. If for some reason you took the first one, you had a management opportunity. Guys, crude oil's a mess today. 50-50 doesn't work, 50-50 doesn't work, 50-50 doesn't work. 50-50, get in, manage out, pushes higher, 3 divergences, 4 divergences. If this one doesn't work, well then we've very much identified the range this poor market is stuck in, right? Guys, do you see it? It's pretty easy to identify the range that the market's in. We're defining those edges a little bit. It's okay to let it get outside of that range. It's frustrating to sit and not take a trade. Being a successful day trader isn't necessarily what you do, it's what you don't do. When the advantages aren't there. Smalls are above the large, yep. Well, in 4 divergences in the same price range on an area that hasn't broken, I could make 1,000 cases for not going short here. And it still might go down, right? Because that's the part that you have to realize, is that it still might go down. If you took the first one, you had a management opportunity. And now you're kind of in that holding pattern, waiting for everything to agree. One way or the other. It doesn't matter if it's an up or a down, right? 3 divergences in the same location on an area that has not broken yet. Has the potential to break, but has not broken. We are coming from a good top, right? The overall trend is down. It's okay to let an area break, guys. It's okay to say, you know what? I think it's going to break, but I'm going to let it break. I'm going to let every indicator agree. Smalls below, larger wide, potential to break. And look at this. Larger down, smalls are down, synthetics are down. If nothing else, you've given yourself a little more of an advantage. It's still not an area that's broken. There's divergence potential. If you have to think longer than 5 seconds, it may not be a trade. Or if nothing else, it may not be a trade that you're comfortable with, guys. You don't have to catch everything as a brand new user. What you need to do is identify the advantages, be able to vocalize the disadvantages, and then more than anything, just be consistent. Do the same thing over and over, right? Nexgen's plan hasn't changed in 20 years. Let areas hold. Termination conditions, let the triggers roll. Look for an opportunity. If everything is strong, look for a trend trade right up to the next area. When you get to the next area, it either holds or breaks. If it holds, you can look for a long opportunity. If everything is strong, you can look for a trend trade. Guys, this has been the same plan with Nexgen for as long as I can remember. And I was there on day 1. And it all revolves around letting Fibonacci hold or break. Pretty cool, right? Area with the potential to break but hasn't broken. It had 3 divergences right there. The small triggers were inside. If you took the first shot, it was a management opportunity. If you traded hope, you just got run over. Same thing, right? 50-50. 1, 2, 3, 4, 5 divergences in the same location. We said we could define the edges, couldn't we? I love it. Guys, I get giddy about patterns. The market repeats itself all the time. Every day, the market repeats itself. Post your trades in class. Fill up that spreadsheet, guys, over and over and over again. Don't practice the wrong trades. Present them for feedback. I did this over the weekend too. Here's your checklist, guys. I simplified it. Strong top or bottom, odds favorable, termination conditions, areas for entry. Guys, this is your high probability trend trade checklist with pictures of what it means to have the rules met. Let me share that with you. Did everybody get a copy of my spreadsheet? Does anybody need a copy of my spreadsheet? It's tough when the market isn't just giving it away, isn't it? Exercising that patience bone. What do you guys think on the 13-2? Do I have odds favorable momentum? Give me a Y for yes and N for no. Thumbs up, thumbs down, happy face, smiley face. No. So if I don't have odds favorable momentum as a brand new user, my rules aren't met. I'm not looking for a trade. And just because there's not a trade now doesn't mean that I can't start the process if my large triggers roll, if I end up with odds favorable momentum, if I have a clear path, well, absolutely, I'm going to look for an entry. If this area of support ends up breaking, if the small return below the large, if I get an area inside of favorable large triggers, well, absolutely, I'll look for an entry. Guys, what you do in the moments when your indicators don't agree, when they're not giving advantages, that's going to define you as a trader. It's easy to lose money on the wrong trade. Gary, no HVA, triggers have not crossed. Market flow says down, not up. Well, market flow says up, and it says down. And your 5-1 says up and down. And your 13-2 says up and down. But Gary, what's rule number 1 for an HVA trade? Keep it simple. Large chart must have a termination condition present. It should be beautiful, no triggers through. That's not a termination, right? It's not a termination. It's just a pivot with divergence. Gary, right here, that's a termination condition. That's a pivot with divergence. And this, not just Gary, this is everybody. This was just a pivot with divergence, not a termination condition. It's very much the same look here. There's a pivot without divergence, continues down, but that is the termination condition. And look how it pushes the market. D, everything said down, and you went up. Let's look at your checklist. It's okay. Coming from a good top or bottom? Nah. Odds favorable? Nope. No termination conditions on the 13-2? Well, I would say you're right at a moment of indecision. You saw a cyan line, figured 50-50 trade, took some quick profits. Yeah, you got lucky, D. And I hate telling people that they get lucky. But let's scroll back to this one again. If you win and the rules are wrong, you may have a short-term victory, but what you're doing is you're setting up for long-term failure, right? If you're fighting direction, if you're fighting momentum, if everything says down, and it's okay. D, I've taken this trade. It happens, right? When there's nothing happening, that's the hardest thing to do. But isn't this kind of the same thing? You go long, get run over, go long again. Would have been real easy to get run over again. And it goes back to that picture that I shared earlier. And I'll share it with you, D. You may not have been in the room when I sold it. This is the same thing, other direction. You think it's going to hold, but if it's really going to hold, all those triggers are going to roll. And these trigger lines, these areas give you the opportunity to be patient. And it's hard sometimes. I know it's hard sometimes. I've done it. And typically, and I think Johan proved this earlier, When it's not perfect and you wait for it to be, it's almost the same price. So D, do you see how on your smaller chart, things are starting to change? And this price right here now has trigger lines. Yeah, and it's, man, D, I don't want you to think that you did something wrong as much as you did something that everybody else does. The better you get at reading your indicators, the more you're going to see. The better you get at understanding momentum and divergences in the same position, oh, D, I saw your first entry. You had 3 divergences in the same spot at support, right? And you thought, heck yeah, here we go. I've done it. Yeah, it's normal. So what you do as a newer user, and this is right about the 30-day point for most people, is when you learn to read your indicators, you have to fight trading what you see versus trading your rules. And this is why you'll hear me say a lot, are the rules met? Did the rules get met for the trade? Were your rules met? Have you defined your rules? Because D, I see 1,000 things every day. John Novak and I talk about the market, and what we'll do is we'll say, man, look at this, look at that, it's probably going to do this, this is probably where it's going to go. But if we don't have a rules-based entry to get there, then we sit on our hands and we wait. And your ability to read indicators, D, obviously is getting better and better. You're recognizing these things in the moment, but your rules will keep you patient, right? This might have been a little bit of overrun. Well, if this is really going to stop the market and reverse it, these triggers are going to roll. And it's that patient piece. And I'm going to show you something cool. Here's that blue line that we thought might hold. Right here at that same blue line, the large triggers have rolled. They're coming back above it. We're into the mid band, and the large triggers are a full bar away. Off that mid band, price is likely to come back and close that gap. And there's traders that'll go long at a pivot stop out at support. It's a pullback after the termination condition, after that overrun. And it may not come back and retest the area, but we'll see. We'll come back to it. And D, I love the high probability trend trade. I really do. Honest to goodness. I've never had anybody in the history of me teaching that has dedicated 5 days. 5 days in a row to the high probability trend trade and not been better than 75% winners. Guys, let that sink in. If there is a methodology that's true, that's planned, that's tested, that's proven, if there's a methodology that you have access to 140 pictures almost of those perfect entries, and nobody in the history of me being a teacher for Nexgen has stuck to this best of the best look and not done better than 70 to 80%. Why are you trying to catch everything? My wife asked me that question. She's like, why are you trying to be first when all you have to do is wait for the best? Why are you trying to go counter trend when all you have to do is wait for everything to line up? And it's a question that everyone's going to wrestle with, and every trader's going to wrestle with it, because the reality is most of us like to be busy, don't we? Most of us like to be busy. Look at where those large triggers are, guys, all the way below the reversal bar. Is everybody comfortable with the gap theory? When price accelerates away from those large triggers fast and far, hits an area, it typically snaps back. How many years did I race trying to be first? I know, Adam. It is a hard habit to break. Because if you're not first, you're last, right? What I've found, and this is, everybody's different, is I've gotten my butt kicked so many times trying to be first that I got sick of it. Guys, this is the gap theory. Mid-bands hit, large trigger below the reversal bar marker. Price typically closes that gap. Price typically comes back, closes the gap to the large triggers. It acts as almost like a vacuum, pulling price down. There you go. Expectations met, right? Isn't that amazing? This gap theory tells me don't go long right here. Look at the split in the triggers. Check it out, Adam. Exact same price, right? It's not a long trade, but if you were waiting for everything to line up, it keeps you out of a lot of nonsense. And that's your gap theory, guys. Joel, let's see what you did. Not a good bottom, Joel. What you're looking at here is a pivot. Were you listening when we talked about that? This is just a pivot, isn't it? This is just a pivot. This is just a pivot. This is just a pivot. When does that pivot become a termination condition? I love this picture. That's okay. When does that pivot become a termination condition? I've got a great picture of exactly what you just showed me. Just a pivot with divergence, it's when price comes back and retests that area. When price reaches it, trigger lines stay above. Now I have a termination condition. Just a pivot, if price comes back and retests it and the trigger lines stay above, well, then it's a termination condition. But guys, pivots that come from beyond the area, they love to go back, continue the move. Doesn't make support, pulls back to resistance, finishes to support, exceeds it, pulls back to resistance, finishes to support, exceeds it, pulls back to resistance. Let's see if this one finishes the move to that next level of support. Always learn by ask. So Adam, here's another pattern that you begin to recognize in the market that says, man, I pulled back to that support. My small triggers are down. My synthetics are flat. My large are against me. My trend has changed. I'm just not getting agreement. We don't have to guess. Guessing's no fun, guys. Guessing costs money. It really does. All right, I'm going to leave you guys with the market for a minute. I'm going to go take a break. And then when I come back, I want you guys to run the class for me. When I come back, I want you guys to tell me what we're talking about. So DHL, I want you to post a question in the room. Jar Jar Binks, post a question in the room. Thala, post a question in the room. Let me know what you guys want to talk about in this last hour. This is your class. It's no fun for me when it's a lecture. Adam, did that help a little bit? Was that you that took the trade, waiting for it? Oh, no, that was D. D, did that help a little bit? Sorry, Adam. And D, do you see how that... Yeah, cool. And I love when that happens. And isn't it neat how we can start creating these expectations from patterns? Now we're at that termination area. Now we're at 0675. Price has reached it. All my trigger lines are above. Oh, check this out, guys. Let's go to the manual real quick. Eerily familiar, isn't it? Whoops. Sorry about that. D, you can do whatever you want. So Shogun, a termination condition is just an area that's likely to stop the market. And we can use areas versus trigger lines to determine whether or not we've reached one. So Those areas, let me pull these up. The areas can be divergence highs and lows. They can be one-to-ones, Fibonacci resistance, Fibonacci support. And what we do is every time price reaches an area, we have to ask ourselves where the trigger lies. You have to take a look at it. Let's go back to the live market. Price reaches this area, this divergence low, all of the trigger lines remain above. It lets me know that a short trade into this area doesn't have the advantage of a clear path. So we use that as our rule number 2. No, triggers don't mean buy. So there's 3 parts. Shogun, first of all, welcome to Nexgen. Have you gone through? No, you're okay. We're going to get your questions answered too. But I love to share this with people too. In the self-training section, it kind of introduces you to what a trigger line is, what your areas are. And then everything that we really do revolves around trigger line reading. We use trigger lines to gauge momentum. Our trigger lines help us determine direction. And that's the first thing that we do, Shogun. So we are able to establish the momentum of the market based on the look of the trigger lines. And then when you go to the tutorial section, it comes through and it defines them. When there's space between the small and the large, what we get is a market that has the potential to continue in the direction of the trend. And then once we have that in place, we can use those same trigger lines. When price reaches an area, if the trigger lines don't break through, well then now we have what's called a termination condition, and this becomes an area where the market is likely to stop. And they don't always stop. Sometimes they break, sometimes they don't break, sometimes they have the potential to break. But it always revolves around that comparison of your trigger lines to the area. If price reaches it and none of your trigger lines break through, well then we're not looking for long trades. And if both your small and your large break through, well then we have a clear path. And if the small break through and the large don't, these areas have the potential to break. And I know that this feels like a lot on day one, but what we were talking about is as we come through, well guys, there's the pattern again. Price reaches support, none of the trigger lines have broken through. I don't have a clear path to the bottom yet. When the market stops means exit position? Not necessarily. It doesn't. If you are in a position, Shogun, so let's say hypothetically, you are in a short position, we can identify a termination condition as a great place to take profits. And now we're in a holding pattern. Either the market stops here and reverses, or it continues down. And everything that we do revolves around patterns. We wait for advantageous momentum, we wait for a clear path, and we take opportunities in the direction of the trend, we take opportunities in the direction of the momentum, we take opportunities when the path is clear. That's your basic formula. Not necessarily. This was showing a termination condition potentially. This was showing how price likes to come back and retest the area, keeping you from going long. Who asked, can we go long now? D, what do you think? How would that long have worked out for you? No momentum, small triggers down. See how you don't have to hope? In Shogun, it all starts with a basic approach. And day one is like drinking from, it's like drinking from a fire hose. It really is. But what happens is we take a simple approach, identifying momentum, identifying termination conditions. And what we do is we take 3 rules on only 2 charts, and we'll put these together, and ultimately what happens is these 3 rules give you an advantage of momentum, an advantage of a clear path, as well as an advantage of an entry area. 3 simple rules on 2 charts. And this is what I talk about. The first hour of every day, Shogun, is reinforcing these rules, what they look like, what they mean to you, how to find out if they're met, and how to find that perfect entry. And then it's just a matter of repeating, going through and studying over and over. See how price reached support, but none of my trigger lines were able to break through. It doesn't mean that there's a long trade. It doesn't mean anything other than I don't have a clear path. And because I don't have a clear path, and that's the second element to a successful high probability trend trade, it means that I just kind of have to sit on my hands for a minute and wait for that clear path to be present. Exactly. Isn't that simple? No clear path, no entry. Yeah, and that's the beauty of Fibonacci, Shogun. And this is why Fibonacci is so effective, because every one of these areas are a reflection of fear and greed, right? We can go back and we can look at them, and Fibonacci is nothing new, but we've automated so you can see exactly when areas are likely to hold. You can use this momentum indicator to help you determine whether or not they're going to break. But see how there was no clear path up top? And look what the market's done since. No clear path up top. It pushes down and it retests it, and then it goes again. There's that termination condition on the bottom. Absolutely. So when you open up your software, it's really pretty amazing. I didn't realize that my brother was this smart. When you open up the software, your software is measuring every pivot in the market. It analyzes the data for the last 10 days. There's literally thousands of individual calculations. And if you spent several hours prepping 10 time frames of data, you could calculate all these manually. But the magic of what we do is it depends on 2 things: which lines are most important and which prices have the highest conversation or concentration. So from every one of these, we end up with these. And then my job is to teach you to take a momentum indicator and to use these areas, identify clear paths, and look for an opportunity. Pretty cool, right? Fibonacci level, previous pivot, support. I'm not sure I'm following with you. How about, and I know it's fun to reinvent the wheel, how about momentum and a clear path with an entry area? How's that for a recipe for success? Awesome. Man, thank you for being vocal. I don't think you guys understand how important it is for you to talk to me, to let me know what you see, what you're wondering, what you're thinking, because I'll say the same thing 10,000 ways, and everybody's going to hear it differently. So make sure that I use the voice that resonates with you. And if it doesn't, it's okay to tell me. Hey, Mark, I didn't get what you're saying. I really think you're kind of crazy right now. What do you say we find a different way to say it? Yeah. We all try to, right, Shogun? Because the reality is I think most of us are accustomed to a level of success. Most of the day traders that I meet are very much alphas, type A personalities. They're used to being in charge as opposed to being the one taking the lessons. They usually have the answers. And it's hard to refocus your brain on being a student sometimes. So just let it be simple. So what we have here, guys, smalls are through the area, the large are not. We have both a divergence low as well as support that have the potential to break but haven't broken. I've got 3 divergences coming in the same general area. I've got small triggers inside. Guys, we're putting ourselves in a lower probability situation. And it's just that simple recipe every time. Momentum on itself isn't enough. A clear path on its own maybe isn't enough. But when you put those 2 together and you can identify and pinpoint that area where the market's likely to continue, guys, great things happen. I'm going to take a minute. I need to reload my water. I will be back. We're going to get into the last hour. Keep those questions coming, guys. And then we'll finish strong today. I'll be back in just a sec. All right, here we go. Last hour. And Shogun, I love that you said no and no reinventing the wheel for now. because you will. Ladies and gentlemen, every one of you is going to learn to read your indicators and see things that make you comfortable, understand things that make you uncomfortable, and you're going to create your plan. You're going to create a plan that makes you feel good about everything. Jar Jar, are the 1-to-1s on the 5-1 chart to be considered for analysis, determining clear path, therefore copied over? No. So, Jar Jar, great question. Each of those, every 1-to-1 that you have is unique to the chart that you're looking at, because 1-to-1s are a product of small swings. Those purple ones are small swings. Let me see if I can find the picture that I have about it. There we go. So what you're looking at here, Jar Jar, are small swing 1-to-1s, and they're unique to whatever chart they're on. And there's a lot of math that goes into it, and Fibonacci, and it's all behind the scenes. And 8 shows these pretty clearly. So for me, and Jar Jar, maybe for you as a newer user too, is initially stick to this recipe. Let the 13.2 give you momentum. Let the 13.2 define your termination conditions. And let the 5-1 define your entries. And remember that the only termination condition that I look for on a 5-1 chart is that 3 divergence in the same location. And I know that it's hard because we want to look at everything. And one of the biggest things that people do is they try to add weight to each and every look. They try to, well, this dot says, so that dot must be, and this line's close, and that color is this. And the reality is if you keep it real simple, if you focus on the advantage of momentum, the advantage of no termination conditions on the 13, and then entries on the 5-1, it's going to keep your brain from stressing out too terribly much. Do you see how they're tempting you here? Divergence, 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 divergence. Area hasn't broken. Guys, it may break, but unless you're an amazing chart reader, unless you're real comfortable with change in the moment, these are the areas that'll chew you up as a brand new user. But an experienced user may get in here and get out here and get in here and get out here and get in here and get out here. And eventually your plan will come together and you'll take more trades. Yeah. Yeah, just use those fibs. Absolutely, Jar Jar. Let it be fibs. Because even the 1-to-1s on the 5-1 are unique to the 1-to-1, are unique to the 5-1. And for me, I love seeing a line on the 5-1, especially when there's momentum and a clear path on the 13.2. Because a lot of times that spot on the 5-1 is enough to give me a little bit of a bounce right back to that perfect entry. Does that make sense, Jar Jar? If this were a 13.2, that's a termination condition all day long, right? But because it's the 5-1, it gives me just enough resistance, just enough support to create the bounce back to the area inside of favorable large triggers. And that's why I always let the 13.2 lead the way. Guys, your crude oil, it's still in that range, isn't it? Difficult to find rules met in a range keeps Nexgen users safe quite a bit. What would you guys like to talk about? I love teaching this class. Days like today are the absolute hardest days to teach if you guys don't ask me questions, because there's not a lot of live opportunities for us. Termination, no momentum. Just waiting for it to work itself out, right, Gary? There you go. Ron C., enjoy your afternoon. Sometimes your best trading day is just not trading, right? Only 2 trades that fit the rules today, Gary? And new users, you may be asking yourselves, well, why the hell do I want to waste time on a system that only gives me 2 trades? 2 trades today, right? Some days, these things line up, and it's like an ATM machine. This is not normal. But your rules keep you out of getting run over on the not normal days. I had a trade, I had a day last week. And guys, I want to preface this. With the high probability trend trade, 200 times 15, Bobby, that's not a bad day, is it? $3,000, one trade. Is that right? Did I do the math right? The average human can live off of $3,000 a day. And what Bobby's doing is Bobby took one trade, multiple contracts, best trades, more contracts. As this is a trade that typically wins 70 to 80% of the time. Right? That's a trade that typically wins 70 to 80% of the time, that high probability trend trade. It just means you have to be patient. $3 grand a day is not a bad day, right, Shogun? Bobby, how long have you been with Nexgen? And I think it's important that you guys recognize this, is that there's work that goes into getting to that point. 5 months. 5 months with Nexgen. You've got to study the looks. You've got to recognize the advantages. You have to build the trust. And then take the trades. It's a month's paycheck, not a day's. Exactly, right? So Shogun, let that be your motivation. Your motivation is to be able to do what Bobby does, right? If you ask anybody that's successful with the software, I think that they'll all agree that it all starts with momentum, right? It starts with having the advantage of momentum. It typically has the advantage of a clear path. And then, guys, your entry area, you're going to find your entries, whether it's at an area inside of favorable large triggers, whether it's getting in when the trouble is cleared. It can be done. Anyone ever had a gym membership here? Guys, at my gym, there's treadmills, right? There's barbells. What else is there in a gym? There's cables. All I had to do was buy the membership, guys, and I have access to everything at that gym. If I don't pick up a barbell, I don't get stronger. If I don't hop on that treadmill, I don't get cardio. If I'm not tugging on those cables, I'm not building muscle. Guys, Nexgen provides you the best software in the industry. I commit 15 hours of every week to teach you how to read the indicators to get the advantages, but it's up to you, guys. You have to do the work. So here's your path. Shogun, I'm going to share it with you. Jar Jar, I'm sure you've heard it. I'm going to say it again. 13 trades today, Zeba? Zeba, how come you've only shown me two trades if you've taken 13? Guys, to minimize your learning curve, post your pictures of your trades in class. This is your path, right? Oh, in 50 days. I got you. That makes more sense. Bobby, I was with you. Every trade, win, lose, or draw, if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How will you know the difference? To be sure, you need feedback from us. We are here to help. If you place a trade on the simulator, if you participate in class, guys, there is zero risk of loss or capital. You need someone to tell you what you did right or wrong when you're new. This is part of the educational magic that Nexgen offers new traders. If you've been with us a day, you're learning about the educational path. If you've been with us for a month, you know without a doubt that it works. Ziba, if I can use your name in conversation, Ziba's first week here, she was like, I don't understand a thing. It's like you're talking a different language. And then by the second week, she's like, wait a minute, it's starting to click. And then by the third week, she's like, holy smokes, I'm messing up every lesson you gave me. And then the fourth week, Ziba's nailing entries. And now she's starting to manage those great entries. And it's a path, but Ziba has done the work. Ziba posted everything in the room. She asked a million questions, my favorite kind of student. Here's your outline for education, guys. This is the same thing that I posted in the room first. Of course. Are you ready, Shogun? Because I don't have momentum or a clear path. So just go short when it turns red, right? Just go long when it turns green. Just go long when it turns green. See what I'm doing here? Ziba, are you swearing? Oh, now you're going to change the rules on me. Okay, let's look. Just go long when it turns green. Long when it turns green. Short when it turns red. Crap, no. Long when it goes green. Uh-oh. Long when it goes green. No, go short when it goes red. Do you see it, Shogun? People have tried it. Do they? Well, then I'll tell you what. Shogun, do this. Here's how every great plan comes together. Take 100 pictures of going long when it just turns green. Tell me where your stop is. Tell me where your target is. And after 100 pictures of these, how much do you have to risk to be behind a long bar? How far do you expect it to go? And I'm not saying that it's not a good plan, and it may be what you end up doing ultimately. So that's exactly how plans come to be. Go take a look at it. I don't know anybody that trades it because you may get an up bar and the trend and the momentum is against you, right? Exactly, Shogun. Or you may get a down bar and the trend and momentum is against you. Look at this up bar and look at that momentum. But what if you said, when my triggers are down, when I'm below all the areas and I get a down bar, maybe I'll go short then. Maybe with the advantage of momentum and a clear path, maybe I'll look for an opportunity to use that Fibonacci, right, to give me an advantage. So I encourage everybody, why not? Why not have an advantage every time you go into the trade? Why not have a provable track record? Something that's testable, something that you can go back, rules that can be written. And then you can just say to yourself, well, I know without a fact, if I have odds favorable momentum, if I have no termination conditions, and then if I whittle down those advantages to a smaller chart, well, then I can enter the market with less risk and more opportunity for profits. I love the way your brain works, Shogun. No, that's okay. Are you an engineer? Just curious. Network admin. Yeah, that's almost the same thing. And that's okay. Because when you see a series of patterns and things that are done digitally, your brain automatically tries to make them better, don't they? That's your job as a network admin. How do I make this more efficient? And that puts you in that position where you're like, man, I got to do this. So this is where you've just got to trust a little bit. You've got to trust that 25 years in business, we've done all the work for you. We've done the back testing, we've done the forward testing, we've done everything that you need to be successful in the beginning. There you go. So if you allow it to be simple, be a student for a while, Shogun, what you're going to find is you're going to be able to take these advantages that I teach in class each and every morning, those advantages of momentum, understanding when the market's likely to continue, the advantage of a clear path, understanding when it's not, and those entries. And what you're going to do is you're going to refine it into a trading plan that suits every preference that you have. But it comes from that beginning, that understanding, just how to recognize a few advantages and then looking for opportunities based around advantages. So you want to buy a house where trading will cut it. It's a process. It's definitely a process. You'll find that we're here every step of the way for you. So get in the habit of posting pictures. Don't stop asking questions. There are no silly questions. And just let me know. This is your path right here. You get it? Looks like fun. And then you're like, whoop, I got to study a little bit. And then you think you've got it. That's when people go live too soon. And then you get humbled just a little bit. And right here is where people commit to recognizing advantages. Right here is where people commit to keeping it simple and learning the basics. And then you start this upward trend to mastery. Cool. I'll tell you what, though, I'm thankful for eager people in the class. I'm thankful for people like you that want to get in, that want to learn, that want to ask every question. Guys, you can have a private session 10 times a day. All you have to do is ask a question. All you have to do is ask. No idea, but you keep trying. Joel, I hate to break this to you, my friend, but you're a hell of a chart reader. Joel, you understand every advantage that's present. You're working on the second piece right now. Being okay with not being in a trade, right? Guys, 3 divergences in the same price range on a higher time frame. Straight to resistance, right? And it pushes. Probably a loser for anyone that took it without the advantage of a clear path. Guys, one thing that you're going to find from me too, and Shogun, you'll see this, is I try to be pretty warm and fuzzy. I love to celebrate victories because I've been through exactly what everybody in this room has been through, guys. I started from ground zero. I didn't post in class because it was embarrassing. I didn't take pictures because it felt like work. I never used a spreadsheet because I just, man, that's too much. My last name's Novak. I'm going to be great at this. But I can tell you, the second you embrace the path, the second you allow yourself to be new, the second you focus on getting feedback every day and then going back and studying what you've done, guys, it's such a simple recipe, but it takes patience. You want to see something cool though, Shogun? Can I share something with you? If you make $400 a day, you're making $2,000 a week, right? You're making $8,000 a month. You're making $96,000 a year. That's $400 a day. Pretty cool, right? That same trade, that high probability trend trade that can net $400, if you do it on a 10 lot, it's $4,000. It's $20,000 a month. Do you see how that works? That same 400, that same high probability, that best of the best. That's what Bobby's doing. Bobby's saying, here's my $300 trade, but I'm doing it on 15 contracts. Or whatever it was, $200 trade. You take trades that give you a statistical advantage, or you trade 20 accounts. So what's $100 on one account if you do it on 20? That's a $2,000 trade. What if you turn that into a 2-lot? It's a $4,000 trade. What's it, you know, and it goes exponentially. So Shogun, do you play golf? You're from Canada. Did you play hockey? How's that for stereotyping? It's cold in Canada. Let me do this. Did you play a sport? Did you play any sport at all? Not everybody did. You played soccer. So in soccer, the first thing they teach you is how to dribble, right? Okay. They just teach you ball control. And then once you have ball control, you learn how to get it to your teammate. You learn how to pass. And then once you learn how to pass, then you learn how to set yourself up in front of the goal so that somebody can pass to you. And then you learn how to position your shots to score, right? Trading's no different. That basic foundation, well, you're going to learn how to dribble. You're going to learn how to recognize momentum. And then you're going to learn how to piece it with the next element and the next element. And when you create that foundation, absolutely. Once you create that foundation, you create that understanding, then you start getting good at what you're doing, right? Once you learn how to dribble, once you learn how to pass, once you learn how to recognize those advantages, well, then you become a pretty good soccer player. You know when to take the shot, and you know when to wait, because the shot doesn't give you the highest chance of success. Shogun, that's all we're doing here. It's not the goal that makes you successful. It's the process. It's the process of understanding when it's appropriate to take that shot. That's what yields results. Safia, let's see what you're doing from the other side of the world. 50-50 trade. Perfect entry. And you jumped ship quick, didn't you? Safia, I know why you got in. Why'd you get out? You got stopped out? Why did you move your stop so fast? Why? I know what you did. I can look at your chart and I know exactly what you did, but why did you do what you did? Do you know why? Your first target is $50? Target 1, 411.50. Entry was 1025. Well, that's a point and a quarter. That's okay. And that's okay. But do you see how talking through it? So why weren't you confident? Was it because we had a pivot that didn't come from an area that reached a mid-band? Watch this. And those trigger lines remained a full bar away. Do you guys remember the gap theory? Pivots not from an area, smacks into the mid-band, large triggers are a full bar away. It's a 50-50 trade, isn't it? At best. Don't be sorry. I love this picture. I was watching this and I knew that some of you would take this trade. Look at how flat your synthetics are. Look how flat your large triggers are. What is this? Is this the S&P? So we had a 50-50 trade on the S&P. That's crude oil. Let's talk through it, guys. Price goes right into the mid-band. 50-50 without odds favorable momentum. They're flat. From a pivot beyond the area. Safia, your entry was perfect, wasn't it? On a 50-50 trade, you took an entry. Was it? You already had two divergences on a 50-50 trade. The 5-1 wasn't great. Your synthetics are flat, but your large are up. You've already lost momentum twice. You don't have a clear path. And that second divergence on a 50-50 pushed it all the way back to those large triggers. This is the, oh my gosh, I'm bored. But if you took it, stop goes below the reversal bar, no reason to take profits that fast. This is a trade that if you were really going to take it, if you were really going to commit to it, you probably lose a couple ticks. If you get in the habit of jumping out before you have a reason, you're going to miss a lot of winners. Those quick exits, Safia, mean that you don't trust the trade. And if you don't trust the trade, there's probably something wrong with it, right? Which means that your ability to read charts probably identified that it wasn't perfect, but you wanted to be in a trade, so you got in anyway. See how it closes the gap to the large triggers? It's kind of a mess. Yeah, it's just a patience piece. That great entry, though, I would have been willing to lose a couple ticks on this one, maybe. I think it's a great picture. I think it's a great lesson. Ronald, were you listening to the lesson? And don't forget to cancel out your buy stop from what I'm guessing was a previous trade. Yeah. Guys, look at those triggers. Isn't that ugly? Just flat and lifeless. There's a split between the large and the synthetics. Remember when we defined our absolute best of the best? Strong in the direction of the trend, trending one on top of the other, creating that tiny little window of opportunity. Here they're lifeless, they're flat. This area hasn't broken, this area hasn't broken. We're losing momentum. The triggers are split. Guys, this is very much the, oh my gosh, I haven't taken a trade in an hour and I just want to be in the market. Does that make sense? Don't let the 5-1 talk you into a trade that isn't a great trade. I've done it. Let me raise my hand. I don't ever want you guys to think that you're alone on this journey. I've done it. I've taken that trade. I've completely ignored that they weren't strong triggers. I've completely ignored that I'm in a mid-band coming from a pivot that doesn't come from an area. Completely ignored two divergences and split triggers. Why? Because I get bored. Because I just want to be busy. Pivot from beyond the area, went directly to the mid-band and finished down. Pivot from beyond the area, went directly to the mid-band and finished down. Pivot from beyond the area, went directly to the mid-band, finished down. Pivot from beyond the area, went directly to the mid-band, finished down. Guys, isn't it amazing how often the market does the exact same thing? Give me a Y if you see that, please. So what does that say to me? That says that when I get a pivot that's not a termination condition, I'm going to be a little leery of that mid-band. Because what a great spot for continuation. Goes up, pulls back to the mid-band. And you see this over and over, right? Over and over, you'll see the market do that. Overrun a little bit, pull back to support and go up. Overrun a little bit, pull back to the mid-band and go up. It doesn't happen every time. Overruns a little bit, pulls back to the mid-band, turns into a termination condition. Overruns, doesn't hit resistance, pulls back to the mid-band and support. Everything that we do revolves around patterns. Patterns repeat themselves over and over again. So a great picture for you guys to take. Do you guys take pictures even when you don't trade? I know you do, Gary. Pivots from beyond the areas. I can respect the mid-band and keep myself out of trouble, hoping it breaks. Patterns tell me that often it continues in the direction of the trend. So maybe trades work less often. Is everybody comfortable with that? Guys, do you know how many times I traded into a mid-band before I finally made this picture and believed the pattern? Do you know how many times I had to see it before I believed it? Probably about 1,000. So one of the things that I try to do in this classroom is help you recognize. It closes the gap right back to the triggers. Guys, we have multiple divergences everywhere. We can start to play if-then. If we get some strong triggers to the upside, well, then maybe we're finally done with the down. But my large are still below an area. I've had multiple divergences, right? They're just fighting it out. That's all it is. Abdul, you've taken one trade today. Strong triggers. Perfect pullback to the area. Every chart agrees. How did it turn out? And you made money. Every chart agreed, didn't it? Everything set up. Everything set up. Everything set up. Ziba, I think this is the one that you took as well. Beautiful entries create manageable trades. Let's do a little math. In at 71 and in at 70. So there's $200, 380, about 480-ish, Abdul. Is that right? Am I reading that right? Can I round up to 500? What if that's the only trades you take today? That's not a bad day in a market that's just not giving away, is it? That's a good real money day. You know the average person doesn't make $500 a day, right? What if you're just bored every day and you make $2,500 a week? If you make 12 grand a month or 10 grand a month, how many friends do you have that make 6 figures that work for 3 minutes a day, that actually do any real work for 3 minutes, and the rest of their day is spent waiting for the advantages? Abdul, you get the Patience Award today. Adam P., let's see what you did. Everything says up. There's no termination conditions. You didn't get filled on your perfect entry, but when market flow gave you the signal, you said, I'll take it. Made money. Adam, beautiful. Everything agrees. It is, isn't it? Everything agrees. And you used Fibonacci to take the second exit. Adam, great job. Ziba, everything says go. Perfect entry. Manageable trade. Guys, my father-in-law used to say wish in one hand and shit in the other. And pardon my French. Guys, you can wish for the money all you want, right? Adam, good job. Wish for the money all you want. I wish I'd make $10,000 a day. I want to make $1 million a year. Good. The reality is what you need to say is I want a methodology that gives me an advantage. I want a methodology that wins more than it loses. I want a methodology that has so many advantages that I can't help but not take these trades. And Ziba, you took a medium probability trade, right? It wasn't the best trigger look, but everything else supported your trade. And because you took a great entry and you had strong triggers, it's a pretty easy win. So if you're brand new, oh my gosh, that mid band, not again. Holy smokes. I love it. But the point of that, stop wishing to make money. Stop hoping to make money. Guys, the money's out there and it's for you. Focus on the process. Learn how to swing your golf clubs before you start insisting on birdies, right? Learn how to dribble the ball before you think you deserve the right to be doing that Pele bicycle over the head kick. I know you guys are old enough to remember that. Focus on the process so that it can yield the results. Guys, great class today. As usual, you did an amazing job posting pictures. Today was a patience day, wasn't it? If you were patient, if you waited for your rules to be met, today was a pretty good day. If you honestly waited for your rules to be met, you were probably bored out of your skull today. These are the days it could, or it might just keep doing this. I don't know. 9 a.m. to 12 p.m. Absolutely, Shogun. And it's the same setup every day. We talk about the rules. And then we just spend the rest of the day talking about what you guys are doing, Monday to Friday. Absolutely. You get 15 hours a week of live instruction. 15 hours where you can ask any question you can think of. 15 hours where you can show me every picture. So the next step is, guys, make sure that you have TechSmith capture. Make sure that you can take a picture, that you can ask a question via pictures. Yeah, and Gary just said it. Post pictures with your questions. Best thing you can do. How can you trade the ES while also trading crude? Just trade them, Abdul. Are you on 7 or 8? You're on 8. So there's 2 ways to do it. Whoops, I just pulled up Discord, not 8. So there's 2 ways to do it. I am opening up everything but 8 here. Let me see if I can get 8 up. About 10 monitors. Well, you need room to do it, right? You need room to do it. But what you can do, Abdul, is you can have the individual workspaces and you can toggle back and forth like I do on 7. If I just click Shift F3, it goes to the other chart. So you can do it like that, or if you have enough monitors and the attention span, whoops, it just kicked me out of Discord. Give me just 1 second, I'll come back. If you have the attention span, if you are comfortable with, let me get going here again. Sorry about that, guys. One thing you can do is you can build a new workspace that has both crude oil and the S&P on it and look at them at the same time. And that's up to you whether or not you're comfortable with that. Me personally, I have two workspaces going, but I only focus on one. What happens is if you're not super confident with what you're looking for, if you're not really in tune with your rules being met or not being met, what may happen, and this happens a lot, watch this. So I'm watching crude and I'm going, oh man, there's nothing going on. Shoot, what am I going to do? I'll go check the S&P. Oh crap, I just missed an entry on the S&P. Man, let me jump in. Let me jump in because I think I just missed an entry, right? And then you jump in and you're like, whew, I'm so glad I got that one. And then you're like, son of a gun, that was a 50-50 with two divergences and a higher divergence. And you get stopped out and you're like, well, I better go make something happen over here in crude because I just got stopped out of an S&P trade that I didn't give my full attention. And then maybe you're like, it's red, I'm going short. So I always encourage people, be real in tune with what you're doing. Because if you're trying to trade multiple markets and you're only giving them each half of your attention, then that half attention better be good enough to do analysis on the spot and make sure that your rules are met instantly. I'll look at both, but if one even has the potential for a setup, I'll ignore the other one until either that setup becomes a trade or that setup does not become a trade. And then I'll look at the other charts. I know my brother looks at one chart. He'll look at the S&P. That's it. He's like, there's more money than I could ever spend on the S&P. I don't need to look at crude as well. So, did that answer your question? It can be done. I run two charts, two workspaces, but I make sure that my attention's where it needs to be. So hopefully you can do that too. And guys, that's it for me. What a great day today. Thank you for being here. Shogun, welcome to the class. DHL, welcome to the class. Jar Jar, great to have you back. Thala, appreciate you. Ziba, guys, everybody. Adam, D, all you guys that post, Muhammad, thank you for the participation. I don't think you guys understand fully how amazing this class can be because of what you guys do. I just talk. I understand how to read the indicators. When you guys tell me you need help, that's when things happen. So have a great afternoon. Study. Shogun, go to the Discord page and go to self-training. Watch a couple videos. Get comfortable with what we're looking at. And then come back tomorrow with all the questions that you have. I'll be happy to answer them. I'll see you guys in the morning. Take care, everybody. Gary's like, you don't get to go anywhere, Mark. I'm posting a picture. It's not even a trade, Gary. Anything can happen. 50-50, divergence prints. Isn't that cool, though, Gary? Trickle down. This says blah. This says maybe. This says eh. That doesn't really produce a lot of confidence. And I'll be darned. 50-50 doesn't give you a winner. Guys, have an awesome day. I will see you in the morning. Thank you for being here. Enjoy your afternoon, everybody.